going on. So this video is strictly for explaining how I mark up my charts, right? So right now, as you can see, I'm watching my mentor right now, Andre Diaz. Y'all go subscribe to his YouTube channel. Make sure you subscribe to his YouTube channel, 22-year-old day trader, 24-year-old day trader. I think Alex G is 25. That's my other mentor. This was my first mentor, and this is my second mentor. And I also be watching Jim Ryan too, just for motivational things. Podcasts and such like that whenever I'm working out. But yeah, we're gonna leave that for that. So, how I mark out my charts. We are only going to be focused on these pairs right here. NAS, US30, and GBP, JPY, USD. Yeah. Also, we're going to be doing the USD JPY pair, the Euro USD. Well, no, not the Euro USD. I'm really thinking about taking this off of my list of pairs because I just found out that I can trade this now. NAS 100 USD, US 30, GJ, and USD JPY. How I start marking my charts up. Send off a message. How I start off marking my charts. Every Sunday, I start with the top pair. I go to the weekly. The understanding when it comes down to candlesticks is you're gonna want to start from the higher time frames and work your way down. Now, this whole year I've been battling between the set and forget strategy and the fair value, the 4-hour fair value gap strategy. It led me to go on to lower time frames, 15, 5, 1 minute time frames, taking my entry on the 1 minute time frame, etc., etc. Stop doing that and stuck to one strategy, the only strategy that has been working for me. And simply because on the higher time frames, it tells the truth. The lower time frames just tell what happened in the higher time frame. If y'all can catch my drift on that, y'all understand that part. So what happens is I start on the weekly. What's happening on the weekly? We're in a bullish trend. That means it's going up. You see, it's going up, right? So I want to mark up area of interest. I'll take this one as an area of interest. Turn it white. In this area of interest right here. All right, that's just for the weekly. And what I do is on the weekly, I mark up the area of interest. The daily, I determine the bias, which is if weekly and daily is in match. So that means the weekly bull, the daily got to be bull, and then that's what my bias is for the rest of the week. After that, it's the 4-hour. The 4-hour, I mark up fair value gap still, I'm not gonna lie. And then the smaller area of interest that's gonna, you know what I'm saying, make it more quicker for me to jump in on the 1 hour and take my position. So the weekly was bullish, daily is also bullish. All right. I do believe that was an area of interest on these candlesticks right here, the Hakinashi. We're not gonna worry about that. Weekly bullish, daily bullish, and we are above the 50 EMA, which is this blue line. We are above the line. When we're above, we're buying. When we're under, we're selling. Remember that. Daily bullish. That's our weekly area of interest right here. I could mark up daily area of interest by doing this right here as a daily fair value gap. What's going on? Daily area of interest. I don't have my glasses on. Y'all forgive me for that look I just made. Okay, better. Okay, daily area of interest is now marked. We actually have 2 of them. It's just the one, though we have 3 of them. Jesus. 1, 2, 3. But we're only going to be interested in, let's see, these 2 at the bottom right here. We're only going to be interested in this. This ain't nothing but like a discount and premium range. I believe, if I'm not mistaken, we're buying at a discount, selling at a premium. I believe. Now, I could be wrong on this, so don't quote me. I'm still learning. I barely use that. It's called a retracement tool. I barely use it myself, so don't quote me. Weekly bullish, daily bullish. We are above the EMA, which is the blue line. We have our area of interest on for the daily 4 hour. What our 4 hour looking like? Also, I'm gonna touch this up a little bit more because we are, okay. This is also interesting, right? So these are the trades that I took last week. Friday. Well, I took this one Thursday, and it ended up playing out into Friday. And then Friday morning, I took this trade right here. So we already know that. Let's go ahead and take these off. Let's take this off. This will be generally used as an area of interest, or an order block. In most cases, this will be called an order block. Also with setting one up right here. So this would be, a minute, bear with me. So this would be considered as an order block as well. And what we're doing is basically like, with this, it's going to be my confirmation just as well as my daily area of interest, right? So the fair value gaps, what happens is price always going to want to trade back into fair value gap. So technically it should look like either this and keep going higher, or it's going to look like this and keep going higher, or it's going to look like this and keep going higher. That's only if it's going to continue in bullish state, right? Now, okay, we're good. So boom. As I was saying, if I can remember, we're on the 4 hour. Everything is looking to go. So it's rejecting here, right? When the markets open back up, 9 times out of 10, it's gonna like shoot down because of the way it was going when it closed Friday night. So let's go to the 1 hour real quick and see. Yeah, so this is where I would be taking my entries, right? So I would be like, it looks like it going up, but like I said, it was going down at some point before the markets closed. So we're either looking for something like this, or we're looking for something like this. Retest and sell out, right? So these are the two prize picks for next week. Those are our area of interest. So we're basically just gonna wait it out. We're not taking no trades until it actually give us a confirmation. Our confirmations will be on the 15-minute time frame, right? So the confirmation will look like this. So this candlestick right here. See how it went into this and it traded up. Now once this candlestick at 8:30 opened, it had a retracement into it, but it rejected. See this candle wick? That means it was a rejection from this area. Now once this candlestick closed like this, we knew that it's going to continue to go up. So we could have placed a buy realistically right here, right? Gonna grab us a 30 pip stop loss, targeting here, which here would be these highs over here, right? To get a 1 to 2.5 risk to reward. So we're gonna be interested in doing that same thing only if we have a rejection from this area like this. That's one tap. We need another tap. Two taps of entry, right? So we will put it right here, aiming for these highs, right? Same thing. It's the same thing. It never fails, right? So that's what we're going to be looking for. Keep that one up. All right. Okay.
Unique Styles made this one.
Hold it down. This was my weekly markup. Today is Sunday, December 8th. Sip on my coffee. As y'all can hear, my son's calling my name, so it's time to go. Deuces.